Greetings, everybody. Welcome to the Liberty Call. Today is Friday, October 20th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It is a beautiful day here again in Colorado. It is, what's the weather here? What's the temp? 76 degrees. Wow, it's actually kind of warm today. So going outside, all the leaves are almost brown. What I need to do is go to my Ring camera and look at it from day to day to see. Because I think last weekend everything was still green, and it's now Friday and everything is brown. So it happens quick out here, folks. There's gonna be leaves all over my front yard and everywhere else. So, anyways, so I like again. Hope you're having a wonderful Friday, and I'm here by myself. My wife has deserted me to go on a cruise with her mom, so I had to drive out to the Denver airport late last night to drop her off so she could take the red eye across the country out to the East Coast. So it's just me and my boy Jake, and I don't know where he is. He's abandoned me too. So, but anyways, I'll survive over the next week by myself. So anyways, all right, more angry markets. I see a lot of red on my screen. The week is not finishing up too good, unfortunately. But again, if you've been paying along and paying attention and watching along with my videos, you know what my kind of forecast is for the future, and it's not good. So. Anyways, all right, well, let's go ahead. Oh, let me stop here. If it's your first time watching Liberty Call, I'm glad you're here. I know you've listened to me ramble for about a minute and a half already. So, if you could do me a favor, give me some thumbs up, like, share, subscribes, follows, hit the notification bell because you want to know when I go live. And now let's get into the numbers for today. All righty, Dow Jones was down 0.86%, 286 points, closed at 33,127. S&P 500 was down 1.3%, closed at 4222. NASDAQ down 1.53%, closed at 12,983. The VIX was up 1.21% today. It's at 2166. Canada was down 1.21%. Brazil was down 0.71%, and Mexico was down 1.13%. Over in Europe, Germany was down 1.64, the UK down 1.3, France down 1.52, the Netherlands down 1.56, Spain down 1.29, Italy down 1.4, Switzerland down 0.95, and Portugal down 1.8%. Russian exchanges both green again today. The MOEX up 0.43, the RTSI up 2.34%. And the Asian markets, the Nikkei in Japan was down 0.52%, Australia down 1.16%, New Zealand down 1.48%, in China, the Shanghai down 0.74%, the Shenzhen component down 0.88%, China A50 down 0.45%, DJ Shanghai down 0.65%, same with the Hang Seng, and the Taiwan weighted was flat down 0.07%. So looks like most things were down, Western Europe and here domestically, most things were down about 1% to 1.5%-ish. And in Asia, most of the losses were less than 1%. So, all right, let's go ahead and get to, where's my charts? There we are. Let's get to the charts and take a look and see. Here's the Dow Jones. Let's move the lines off. And let's go to the 1 week and see where things are sitting at right now. All righty. So for this week, the Dow Jones is going to finish the week down about 2.09%. The S&P 500 down about 2.68%. The NASDAQ down approximately 3.47%. Dow Utilities down 2.43, and the Dow Transports only down 1.87. So looks like all the major indices were in the red for this week. So all right, let's go ahead and zoom out and look and see what the trend looks like. This is the Dow Jones. This downtrend began last year, beginning of January of 22. Was bouncing off this resistance here all the way through fourth quarter last year, traded sideways most of this year, had a little bit of an upswing. Beginning of summer, there was some hope out there that the Fed was going to ease rates. Didn't happen. And then if we zoom in, beginning at about August 1st, we begin this lineup for this current downtrend we're in right now. So Personally, I would expect this to continue. Is this going to be like 2007's downturn, which went all the way into the beginning of 2009? I don't know. Could be. Certainly with everything else, all the headwinds we got out there certainly could happen. Let's go over to the S&P 500 chart. Looks very similar. Again, the downtrend last year began at the beginning of January and broke the resistance in January of this year and was on a bit of a sideways / upward trend. Again, I think there was a lot of hope out there that the Fed was going to be easing things, and just didn't happen. And again, the same thing, beginning of August, began this downward trend. And, so again, if it lines up like this and gets really, really bad, I mean, it could, if we have a downturn like we did in 2007, 8, and 9, where things dropped about 50%, from here, you're looking at about 2,400 on the S&P and about around 18,000 on the Dow from the previous peak. So again, folks, now is the time to get your life rafts in order and make sure all of your everything is in, so that when things do go bad, you're not going to get kicked in the balls too hard. So, all right, well, let's go ahead and get to the economic data for the week. All righty, initial jobless claims came in at 198,000. Forecast was 212. Last week's number was 211, so good there. Continuing claims came in at 1.734 million. Forecast was 1.71, so a bit above forecast. Last week's number was 1.705. Retail sales year over year came in at 3.75%. Last month's number was 2.89. On a month-over-month number, grew by 0.7%. Forecast was 0.3. Last month's number was a 0.8. Industrial production year over year only grew at a 0.08 rate, same as last month. The month-over-month number was a 0.3 growth, with the forecast 0.1. Last month's number was flat at 0. Housing starts for this month came in at 1.358 million. If you annualized it, forecast 1.38. So a bit under forecast. And the last month's number was 1.269, so a bit of a jump. We're showing on a month-over-month number a 7% increase. Last month's number was a 12.5% decrease. So kind of back and forth month after month on the housing starts. Existing home sales came in at 3.96 million. If you annualized it, above the forecast of 3.89, and last month's number was 4.04 million. So been trending down since we peaked out in March of this year. It had been trending down the previous year. It had peaked around February, trended all the way down to about February of this year, and then jumped up and then has been trending back down again. The month-over-month number was a 2% contraction. Last month's number was a 0.7% contraction. And the last bit of data, the U.S. leading economic indicators index month-over-month contracted at a negative 0.7%. All right. So, again, the number, the data doesn't look awful. It just, again, it's kind of, things are kind of, it's kind of like when I have to pass a train or go across train tracks to get out to I-25 to get up to town to, do shopping and things like that. So I get to sit and watch the train occasionally for a while. It's always a coal train, usually around 1 o'clock, I think. So I've gotten caught there a bunch of times. I call it electric car fuel, just to be a little sarcastic, because it's like 3 miles long of nothing but coal cars going south towards Pueblo. And actually there was a derailment, I think in the last week, and it shut down I-25 for a few days. So big mess. Anyways, all right, well, let's go and get into the market recap. S&P 500 off lows as Treasury yields retreat, but mixed corporate earnings weigh. All right, on Friday, the S&P 500 experienced a shift away from session lows, while Treasury yields took a break from their recent upward trend. However, stocks remained on track to break a 2-week winning streak due to mixed corporate earnings reports. Treasury yields had surged to their highest levels in over 16 years, but they retreated slightly following Fed Chair Jerome Powell's announcement that interest rates would remain higher for an extended period. Powell also hinted at the possibility of further rate hikes should the economy continue to outperform expectations. In the energy sector, several stocks, including EQT Corp, Halliburton and APA Corporation were impacted by a drop in oil prices. Despite ongoing tensions in the Middle East that could disrupt oil production, energy stocks struggled. Schlumberger, an oil field services company, also faced challenges, with its stock falling by 2% due to mixed quarterly results, particularly revenue missing analyst estimates. American Express reported quarterly results that exceeded expectations, but its shares dropped over 4% due to concerns about tougher upcoming comparisons. Regions Financial Corporation, however, fell short of Wall Street estimates, leading to a 13% decline in its shares. Investors were also concerned about the company's outlook, with factors such as a weaker net interest margin, rising credit pressure, and funding costs contributing to these worries. Knight Swift Transportation, on the other hand, witnessed a rally as it narrowed its full-year earnings guidance and reported better than expected Q2 results. This was seen as a positive sign for the freight industry, and Goldman Sachs raised its price target on the company. Hewlett-Packard Enterprise faced a decline of more than 6% due to disappointing guidance. The company stated that its adjusted earnings per share in 2024 is expected to be between $1.82 and $2.02 per share, falling short of analysts' expectations. Additionally, the company reduced its EBIT growth outlook for 23 from a previous estimate of 6.6 to 7% to approximately 4% as it makes its targeted investments to accelerate growth in its business. All right, so that's everything there. Go to an article from Zero Hedge. It's titled Treasury Loss. You're also paid back in depreciating dollars. This was authored by Simon White of Bloomberg Macro Strategist. So let's see what he has to say here. U.S. Treasuries are currently experiencing one of the most significant drawdowns in the past 5 years, with the Bloomberg Treasury Index down 70% from its peak. This decline might appear small when compared to other major assets, but for longer duration Treasury debt represented by the iShares 20-plus year Treasury bond ETF, TLT, one I've used in the past, I wouldn't use it right now. The long duration bonds are probably something you want to stay away from. And I'm not giving investment advice about TLT, so do what you want. But typically, when rates are rising, your long-term bonds, stay away from them. Let's see here. The maximum drawdown is approaching 50%. This is significant for an asset that is typically considered risk-free, and I like to put that in quotes. In an inflationary cracked my lip. In an inflationary environment, the real value of assets become paramount. When using U.S. headline CPI indexed to 100 in 1990, real indices for various assets can be constructed, allowing like-for-like comparisons. When assessing maximum drawdowns, while with inflation factored in, the picture changes. While the S&P 500 experienced the largest drawdown during the Great Depression, the U.S. dollar stands out. The U.S. dollar saw a maximum peak to trough decline of 91% during the 1970s. In nominal terms, the dollar decreased, but high inflation throughout the decade significantly eroded its real value, leaving it with only a fraction of its purchasing power at the decade's start. Various factors, including the closure of the gold window in 71, the Arab oil embargo in 73, and the Iranian Revolution in 79, contributed to this decline. The real declining value of the dollar, particularly in times of elevated inflation, exacerbates the challenges of holding these treasuries. This means that dollars they received upon maturity have diminished purchasing power, compounding the losses experienced in the treasury position since the end of 2019. The real value of the dollar has fallen by approximately 9%, further intensifying the 11% total loss in treasuries over the same period. In the 1970s serve as a stark example of how the dollar's real value is particularly vulnerable during periods of high inflation, adding another layer of difficulty for investors facing losses in their treasury holdings. And so basically, if you look at these charts, it just shows, the drawdowns here from the peak, and then also the drawdowns in real terms of value. And then it just shows how the dollar was decimated here in this last chart as far as purchasing power. So it's gone down quite a bit since the time when I was born. Anyways, all right, got one more thing here to share with you guys. It is a video or a podcast from The Naturalist Capitalist. His guest is Scott Horton, and it's titled Scott Horton on Palestine, Israel, and World War III. Scott is the chairman, I think, of the director of the Libertarian Institute. Very, very smart guy when it comes to foreign affairs and especially the Middle East. So we're going to listen to about 5 minutes of his conversation, kind of what has led up to where we're at right now. And we're starting back about 20, 30 years in the early 90s as far as what has created the problems that we're dealing with. And, Scott is a vast wealth of knowledge, whether or not it's Russia, Ukraine, or the Palestinians and the Israelis and their conflicts, through the decades. This guy knows all the details. So let's go ahead and listen in on their conversation. I have the speed set at about 1.5. So if they talk a little fast, go and watch this in its entirety. It's about an hour and 12 minutes long, but it is a really good conversation. So I'm going to mute my mic and we're going to go ahead and listen to them talk.
And Gaddafi, by the way, when he was working for the United States before Obama betrayed him and murdered him, had murdered this guy al-Libi in his cell and called it a suicide on the Bill Clinton model, because that's how they do. But anyway, so the CIA knew that there was no ties between al-Qaeda and Saddam Hussein, and they knew that there were no weapons of mass destruction. They had to lie, and they came up with the lies to justify this policy. Now, look, I'm not sitting here blaming the JOOS for every little thing like some people want to do. That's not what I'm talking about. I'm just only talking about the real history of what happened. George W. Bush, Dick Cheney, and Donald Rumsfeld are not Jews. Right? George W. Bush did this because he wanted to look tougher than his father. He thought it would be smart. And in fact, it was smart, Reed, to get him reelected. Unlike his stupid dad who stopped his war a year and a half before his reelection campaign was up, right? W. Bush knew you got to be in the middle of a war, Dad. That way you can get reelected. You don't change horses in midstream. Even dumbass George W. Bush understood that, had advised his father that in 91. And then his father disregarded his advice and ended the war and lost. So W. Bush said, oh, see how smart I am? And he admitted it to Mickey Herskowitz. He said, if I have a chance to go to war with Iraq, that's what I'm going to do, because that's what a great president needs, is a war against a weak little country. And then you can get your domestic agenda through and be a great leader. He said that. And people go, oh, no, that's a fake quote. Really? Then how come George W. Bush's father hired Mickey Herskowitz after that to write the biography of his father, Prescott Bush, if Mickey Herskowitz was lying about the boy lying us into war? Because he wasn't lying. It was a true quote. Read it and weep. Okay? Dick Cheney had taken Halliburton, not run by Jews, and he had run it into the damn ground. He was a terrible CEO. The only reason they hired him was because he had been the Secretary of Defense, and they thought that he could put him on the dole. But he couldn't. It was the Clinton years, and he didn't have any real special connections. But as a businessman, he didn't know what he was doing. And so Cheney and his right-hand man, his COO, without doing their diligence, they had Halliburton buy Dresser Industries. The board of directors let them do it. You guys are in charge. Go ahead. They bought Dresser Industries. Well, guess what? Dresser Industries was about to be, they were literally weeks away from beginning to be held liable on billions of dollars worth of asbestos lung cancer claims. Okay, mesothelioma and how do you say that? And lung cancer. And Dresser was about to get their ass handed to them. And Dick Cheney bought the company a couple of weeks before the verdict started coming in, which is just the most boneheaded move in the history of business. It's an absolute catastrophe. And I don't know that they threatened to murder his entire family or anything like that, but I would advise you, Reed, that if you ever do business with those gangsters down in Houston that run Halliburton, that you deliver for the price that you had assured them, and you don't go and run their company into the ground. And I'm sure, they probably didn't threaten him. Just he knew good and well. He had a job to do. And that was to become vice president of the United States, launch a war, and put Halliburton on the dole and transfer hundreds of billions of dollars of American tax dollars into their coffers to make up for the fact that he had nearly destroyed their business in the 1990s. Nobody ever talks about that. I don't know why. I think I had heard it somewhere, and then I looked into it and found it all myself when I was researching for the book. I don't know if anybody else ever really wrote about that angle of it, but I'm certain that this is, if you look at 1994, everybody type in Dick Cheney, 1994, Iraq, and you'll see he's being interviewed at AEI. And the guy asks him, because this was the Paul Wolfowitz, Richard Pearl line at the time, was, why didn't you go all the way to Baghdad? Were you gay or something? You sissy? So Dick Cheney is defending the policy of stopping the war, right? And he's saying, listen, if we'd gone all the way to Baghdad, we'd have been bogged down in urban combat, trying to find Saddam Hussein, trying to form a new government to replace him. Meanwhile, we'd have had pieces of Iraq fly off, he says. Iran would come to dominate the South. Syria, he says, would like the West, which that's ridiculous. I don't know what he's talking about, that Syria wanted the West. It was only when Barack Obama backed the bin Ladenites in Syria that they seized eastern Syria and western Iraq. But anyway, and then he says, and we could have a real problem with our allies, the Turks, because of the Kurdish situation in northern Iraq, where if they have independence, that could cause a problem with the Kurdish population of Turkey, which we help our Turkish allies oppress their Kurds, of course, right? And so Dick Cheney explains to the AEI guy, no, it's not that we're sissies, it's that we're smart. We decided to call it off before everything went completely to hell, right? So he knows what he's talking about, right? Then 9 years later, he launches the war. Same guy, right? He knows why not to do it. He does it anyway. Why? For the money.
So at this point.
All right, we'll go ahead and stop that there. Really good interview. Again, it was hard to find a few minutes of Scott, where I could, a concise, set of minutes where he took a breath where I could jump in and we could start, and it didn't make complete nonsense because you didn't know what the previous thing he was talking about. So I found about 5 minutes to cover, leading up to a lot of the problems of, Desert Storm 2, the different, people behind the scenes as far as why we're in this predicament that we're in right now. Hey, I was one of those guys serving in the military back in the 90s who, unbeknownst to me, I had no clue what was going on. I was just fixing jets and, drinking beer and, meeting my wife and all that good stuff. So anyways, it's a good interview. I don't think the language is too salty anywhere, but they do talk on some sensitive subjects. But anyways, all right. Well, that is everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you guys have a wonderful weekend. And my boy Jake came back. He wants to go play some ball as soon as you want to play some ball, Jake. Jake, want to play ball? Yes, he does. Look at that boy. So we're going to go play some ball out front here in a few minutes once I get all my uploads done and get all the maintenance I have to do behind the scenes. So there's a little sausage that gets made, after I hit stop. And, I got to do some things here after the fact. So, all right. So like I said, everyone have a wonderful weekend. And there's going to be a lot of sports. The Cougars play Texas at home in football. You got couple more, got at least one more game in Arlington for the Astros. They seem to play well on the road, and we'll see where that goes. Fingers crossed. And, hey, that's it. So like I said, have a great weekend and, share this with somebody if you could. I would really, really appreciate it. If there's anyone actually watching at this point, I mean, we're 22 minutes in, but anyway, so like I said, have a great weekend and I will talk to you guys next time. Adios.